Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. If you haven't seen part 1 yet, be sure to check it out. Now, let's get into the advanced strategies and key insights that will help you grow and manage your rental property business. Risks and challenges. Vacancy, maintenance, market cycles. Holding rental property isn't just passive income and watching home values climb. Some challenges can keep you up at night if you're not prepared. Vacancy. When your property sits empty, you still have to pay the mortgage and other bills. Local job markets, price competition, or even bad reviews can leave you with gaps between tenants. Maintenance and repairs. Toilets break, roofs leak, and appliances wear out. Unexpected repairs can eat into your profits. Sometimes big-ticket items like HVAC systems fail at the worst possible time. Market cycles. Property values and rental prices can drop during downturns. If you buy at the peak, you might see your home's paper value dip for years. Some cities also set strict rules on rent increases or evictions, which can affect your bottom line. Even experienced investors face these problems. The key is having a plan for the what-ifs. How to mitigate potential risks. You don't have to roll the dice. Many risks can be managed with some planning and discipline. Screen tenants carefully. Good tenants pay on time and take care of your property. Use professional background checks, call references, and trust your gut. Keep an emergency fund. Stash away at least 3 to 6 months of expenses. This way, a sudden repair or a few weeks without rent won't wreck your budget. Regular maintenance. Small fixes now prevent big headaches later. Set a schedule for inspections and address issues early. Track local market trends. Pay attention to jobs reports, school ratings, and neighborhood upgrades. These help you spot trouble or opportunity before everyone else. Know the law. Stay up to date on local rental laws. Understand your rights and responsibilities, plus recent changes that may affect you. By treating your property like a business and putting systems in place, you make the upsides more likely and the headaches smaller. Good planning helps you sleep well, even when surprises pop up. Essential steps to start investing in residential rentals. Getting started with residential rental properties takes more than just a cash deposit and a for rent sign. Each step you take before making your first purchase is a building block for future success. From setting clear goals to understanding legal details, this part of the investment process can set you up for years of steady income and fewer surprises. Let's walk through what you need to do before you buy your first rental property. Setting investment goals and budget. Begin with a clear purpose. Are you looking for steady monthly income, long-term value growth, or a mix of both? Your answer shapes everything from property choice to financing. Short-term cash flow investors focus on homes that rent easily and bring in extra money after all expenses. Long-term growth seekers look for properties in growing neighborhoods or cities, betting on rising home values over time. Lifestyle goals matter too. If you want less hands-on work, look for properties with lower upkeep or consider hiring a manager. After you set your goals, be honest about your budget. List your available savings, possible loan amounts, and how much risk you can accept. Include money for down payment, usually 15 to 25% of the price. Closing costs, 2 to 5% of purchase price. Repairs and updates before renting. Emergency fund for unexpected costs. Writing out your target returns helps you stay focused when emotions or hot deals pop up. It's easy to stick with the plan when you know what you want, ChatGPT said, to accomplish. Researching markets and identifying properties. Start by diving into the neighborhoods that meet your goals. Use online real estate tools to check prices, rental rates, and vacancy rates. Look for areas with stable or growing demand. Check job growth, new businesses, schools, and local amenities. Once you have a list of places, narrow it down to specific properties. Compare prices, amenities, and rental returns. Make sure your property's rent will cover the mortgage and other costs. Also, research zoning laws, local ordinances, and any restrictions that may affect rental opportunities in that area. Securing financing. Most investors need a loan to buy a property. Lenders typically require a down payment of 15%, 25% for a rental property. To secure the best terms, check your credit score and debt-to-income ratio before applying. You can go with a conventional mortgage, but some government programs and non-traditional lenders offer specialized options. Don't forget to account for interest rates and loan terms, as these affect your monthly payments and long-term profitability. Closing the deal. Once you've found a property, get a professional inspection. This helps identify hidden problems before you commit. After the inspection clears, work with an attorney and title company to finalize the deal. Once you sign on the dotted line, you officially own the property and can begin preparing it for tenants. Managing and maintaining the property. Once you own the property, you'll be responsible for rent collection, maintenance, and tenant relations. You can either manage the property yourself or hire a property management company. Keep records of rent payments, repairs, and expenses. Regular maintenance helps protect your investment from costly future repairs. Residential rental properties offer great potential for wealth and passive income, but success requires knowledge, patience, and planning. By understanding the market, managing risks, and following smart steps, you can build a strong rental property portfolio that pays off in the long run. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.